Imagine you have £10,000 to invest and you're curious about where to put your money for the best returns. Today, we'll explore what happens when you split that amount equally across 5 different assets. Over the next few minutes, we'll break down the performance of each investment after 1 year so you can see how your money could have grown or shrunk depending on your choices. Whether you're new to investing or just looking for fresh ideas, this journey will give you a clear, practical look at real-world results. Let's dive in and see how each asset performed. Keep things simple and fair. We'll divide the 10,000 evenly, pound 2000 in each asset. The 5 assets we'll look at are stocks, real estate, gold, cryptocurrency, and cash savings. Each one represents a different approach to building wealth with its own risks and rewards. By comparing these side by side, you'll get a sense of how diversification can impact your overall returns. Now let's take a closer look at each asset and see what happened over the past year. First up, let's talk about stocks. Over the past year, the stock market has seen its share of ups and downs. If you'd invested £2,000 in a broad market index fund, you might have ended up with a modest gain depending on the market's overall performance. Historically, stocks offer growth potential, but they also come with volatility. This year, let's say your investment grew by around 8%, bringing your total to about £2,160. Not bad for a year's work, especially if you're in it for the long haul. Next, let's look at real estate. Property investments can be a solid way to build wealth, though they often require more time and effort. Over the past year, the real estate market has been relatively stable, with some regions seeing slight increases in value. If your £2,000 was invested in a real estate investment trust REIT, you might have seen a return of about 5%, ending the year with roughly £2,100. While not as high as stocks, real estate can offer steady growth and income through dividends. Gold is often seen as a safe haven during uncertain times. Over the past year, gold prices have fluctuated, but overall, the asset has held its value. If you put £2,000 into gold, you might have seen a small increase, say around 2%. That means you finished the year with about £2,040. Gold doesn't always deliver big gains, but it's valued for its ability to preserve wealth and provide stability when other markets are shaky. Cryptocurrency is known for its wild swings, and this year was no exception. If you'd invested £2,000 in a leading cryptocurrency, your results could have varied dramatically. Let's say the market was particularly volatile and your investment dropped by 15%. That would leave you with about £1,700 after 1 year. Crypto can offer huge rewards, but it's also one of the riskiest assets, so it's important to be prepared for both gains and losses. Finally, let's consider cash savings. If you kept £2,000 in a high-interest savings account, you'd earn a small but guaranteed return. With interest rates still relatively low, you might see about 1% growth, ending the year with £2,020. While cash is the safest option, it also offers the lowest returns, and inflation can eat away at your purchasing power over time. Still, it's a good way to keep your money accessible and secure. Now let's bring it all together. After 1 year, your £10,000 investment would have grown or shrunk depending on the mix of assets. Stocks and real estate delivered solid gains, gold held steady, cash savings offered minimal growth, and cryptocurrency showed the most risk with a loss. This comparison highlights the importance of diversification. Spreading your money across different assets can help balance risk and reward and protect your wealth from market swings. Summary: investing £10,000 across 5 different assets over 1 year shows that no single investment is perfect. Stocks and real estate provided the best returns this time, while gold and cash offered safety, and cryptocurrency reminded us of the risks involved. The key lesson is to diversify and match your investments to your goals and risk tolerance. By understanding how each asset performs, you can make smarter choices for your financial future. Thanks for joining this investment journey.